Hello, trading is closed on November 15th, 2018. Wow, what a day. These are some moves. Yesterday we said that there was considerable support at these levels, and unless we invalidated the pattern by gapping under this low, higher prices should print. Well, you can't use cash prices because the whole SPX doesn't open at once. You have to use futures. And when you look at futures, you'll see we didn't gap under this low. Now, we did gap down and trade under it promptly, which kind of muddles the signal. But if you're coming down to a support level as strong as this one, if you don't gap under it, you have to expect the support to hold at some point. Now, usually I say if the day's a day with an early high or an early low, I intentionally omitted it. Yesterday, somebody kind of called me on it and said, which pattern is it? And I told him I thought it was the one with the early high, but it might be unrecognizable when the day is over. Believe it or not, even though it looks like the pattern with the early low, this is a pattern with the early high. Here's your spell, all these times fit. And I'm reasonably confident this is the pattern with the early high, just as I'm reasonably confident 32 calendar days from now, December 17th, we're going to get another pattern with an early high, or even when the day is over, it might be unrecognizable. Not saying it will be unrecognizable, but more often than not it is. Tomorrow's pattern has the early low, tends to start low, rally all day long, close near the high. It's particularly true on Friday. If it's a down day, it tends to drop early, typically in the first hour or two. As we'll see, I don't think that's going to happen. MEJT gave a buy signal here. We didn't have to go as high as this. As I say in the book, this is a pattern where as long as this low holds, the rally tends to be strong, and it wouldn't surprise me if it wound up being stronger than this. Well, these lines we showed you yesterday are TDST lines. We went under this one. This is a TDST line on the daily chart right before the January top. And the market never forgets these lines. This is a lot of support, and you can break it, but what counts in DeMark stuff is how we close. And we give all this support. It's going to be pretty tough to close under it unless you gap under it to begin with, which didn't happen. Well, what's going on here? Here's your stilt. Here's your stilt. That's your diamond. Typically, the origin of the left stilt is resistance. It tends to hold its resistance the first time it's hit. And if you hit it again, not in a day or two, but later than that, it tends to break in grand style. Here we went right through it and retested it as support. Same rule. The first time it's tested as support, it tends to hold. You might test it again tomorrow, but the longer you wait, the more likely a retest of this support will fail in grand style. Now, it's possible to get targets by taking fib ratios of these points. You just don't know which one to take. Like when you take this and set this at 50, you get that line, and somewhere in this pattern, although it doesn't have to be a fib target, almost always there is. Now I'm going to guess. My guess is no better than anyone else's. But it would make a pretty picture if these were the points and we topped out around 27.60 cash. Doesn't mean it's the only number that works, but it's a good one. We'll show you why. First of all, this is a logical point for wave 5 to end. Here's wave 3. You take 78.6%, and there's your 5. So again, it isn't the only length that works, but it's a reasonable one. Now, what I like about 27.60 is that if that's where we end, and you start with this point, you get a nice fib retraced here. Right at that point, here's your 61.8. That's the low. And if you go to the high, here's your 38.2. So you've got great Fibonacci targets right around the 27.60 level. It's not the only level that works. There are too many to count, but it's the prettiest one. So for tomorrow, that's a pattern with the early low, late high. We might retest the origin of the left stilt. It's here. Retest it once, but I don't think we'll break it by a significant amount. Look for the pattern with the early low and the late high. If we don't drop steeply at the open, there should be an all-day rally. We have a fib target of 27.60, which doesn't have to be hit in a day, but it doesn't change the long-term picture, which is that this is a rally in a bear market, and once we top out and go through this again, we have much lower prices to come. And that's today's call.